Our next guest covers Facebook and Alphabet along with Snap, which just reported better than expected quarterly results last night. I want to get to that one as well. Joining us right now is Kevin Rippey. He's tech analyst at Evercore ISI. Given this investigation, and this is effectively like, you know, putting out a billboard with your phone number on it for the government, and now I imagine every competitor in town is going to call them if they haven't called them already. How do you think about these four stocks, whether of the biggies, given this now overhang, if this overhang didn't exist before?
Well, I think, you know, the important thing to keep in mind is probably since the breaking of the Cambridge Analytica scandal a year and a half ago, investors have had a long period of time to think through and discount a wide range of scenarios as it relates to antitrust, you know, different global regulatory investigations. And I think we're seeing that today, actually, in, you know, fairly limited downside after the announcement of these new investigations, right? The worst, I think, is Facebook down 1.5%. Google down 1%, Amazon down 1%. These aren't meaningful downside moves in light of what could be otherwise fairly ominous headlines.
So you don't believe, I mean, look, you don't believe that if the government really put pressure on Amazon and said, you know, this marketplace of yours, we don't like it, or if they go to Apple, which obviously is dependent on services long term, at least they've made that a strategic part of their strategy. If they said this app store, you know, you're going to have to open it up. I mean, those I would, you know, anything like that or any even push in that direction, I would think would have a real impact.
Well, I mean, certainly the app stores are an area of vulnerability across both Apple and Google. I think, you know, if we think through what has been the traditional framework by which the government has pursued antitrust, it's largely been grounded in, you know, consumer price and choice. And with the app stores, you have things that do demonstrate kind of common carrier characteristics, which have long been regulated.
Right. What is the lesson? We were talking about the AT&T Time Warner transaction. What is the lesson of that experience? Because that was one of those transactions where most people who studied antitrust at that point would have said, you know what, looks like a classical deal that actually would go through. And yet the Justice Department decided to object. Right. And my question is, how does that relate to this? Because I think a lot of people look at the products, these tech products, and say they're free, they're not hurting consumers. I think a lot of people have looked at...
Consumers have been helped.
Yeah, I think a lot of people are looking at the downside.
I've been helped tremendously by Amazon.
Right. And they say there's no downside risk, or there's very little downside risk. And then you look at the AT&T transaction.
Well, what we saw there, right, was, you know, the DOJ did take objection, but ultimately, you know, proved out to be
they lost.
Yeah, benign outcome, though, right? Like, it was okay.
Benign unless you're sitting there waiting on a deal that you thought was completely legit, that everyone had advised you was completely legit. You were dealing with the head of enforcement there, who had said himself he thought it was completely legit before he took the job.
Well, I suppose you could think through, all right, what would be the areas that could come under scrutiny, right? I mean, we think through the dominant positions.
But that's what I mean. If you're trying to just game this out and play the parlor room based on what we've seen in the past, you would say, okay, no problem. But that hasn't turned out to be the case. This is not an administration that necessarily follows the old game plan, that this is new territory, right?
Well, clearly they pursue unconventional, you know, strategies. And we'll see how that plays out. But I would say so long as consumers aren't really making a push to make a big change, there probably won't be the political will to follow through with, you know, a 5, 6, 7-year process, similar to what we saw with Microsoft. Which
I love my Google. I love
real quick, Snap.
Right.
We talked about we were just mentioning their earnings. What's the chance that they actually succeed amidst this cloud over everybody else? Because everyone's paying attention over here, and maybe there's an opportunity over there.
Yeah, I mean, well, I think Snapchat and the results we saw last night, which were extraordinarily strong, is indicative of the fact that despite all the competition from Instagram, which people have left Snapchat for dead because of that, you know, has found a way to carve out, you know, a new attractive growth profile. Which
is that a niche profile, or is that something that can actually grow in a meaningful, significant way? Well, so that we're talking about it again in the same context as an Instagram.
Well, our view would be that it's largely a niche offering, right? It's going to attract a cohort of 14 to, let's say, 25-year-olds, and, you know, have very strong resonance with them. But as consumers age out of that kind of cohort, maybe you see less and less engagement. We really haven't seen Snapchat break out of that.
Where do they age out to? Facebook or something new?
Yeah, I think Instagram is probably the de facto answer, particularly in developed markets, you know, United States, Western Europe. Outside of that, emerging markets, I think, you know, Facebook Blue still has an enormous amount of, you know, resonance. But yeah, I think that's probably where they age out to.